Hello, everyone, and welcome to another episode of Passive Income Doctor. Today, for first episode of 2026, firstly, I want to wish everyone a happy new year. I think it'll be an interesting time for the property market. I think certain markets will do better than others. And one market which I've been buying heavily in recent times is Darwin, and I think it will do well this year. Already it's starting to work its way into the commentary and investor circles. And I guess there's many strong fundamentals for it. For the longest time, Darwin was a flat market. After 2013 all the way to about in the last few years, you could buy properties for pretty much the same price. And you can argue if you sold it for the same price as it was 10 years ago, not only have you not broken even, you've actually lost money because of the opportunity costs if you invested in other markets in recent times, such as Perth, Brisbane, and so on. And also, as well, you also have to factor in for inflation. If you sell property in 10 years' time for the same price as today, if you factor for inflation, you actually lost money. And also, not to also mention the transaction costs, which can add up, such as stamp duty, the holding costs throughout the period, council rates, property management fees, maintenance, and then also selling agent fees on the way out. So I think picking markets is becoming more and more important. There's courses out there that people are doing to try and get an edge on other investors and things like that. So why Darwin? So historically, it seems Darwin often follows Perth. Obviously, past history is not a predictor of the future. But also, as well, I think there's a lot of tailwinds for the Darwin property market, such as low vacancy rates. I mean, if you look even on realestate.com, you know, how many rental properties there are, often there are not many. And also, as well, rental yields are still now one of the highest in the country in terms of a capital city. When I was started to buy in recent, approximately a year ago, you could get rental yields about 6.5%. Now maybe some more 5.5%, but it's still significantly higher. Say Brisbane, it's probably sub 4% now, Perth's around 4%, Sydney's probably 3%. Melbourne's slightly better, maybe 3.5 to 3.8%. And a lot of people have been buying in regional Victoria. You might be lucky to get 4%. Um, so I think, if you cash flow is important to you as well, um, choosing a property with a stronger rental yield, I think also bodes well. Now, for the demand side, Um, one thing that I will say is a negative for Darwin is a lower owner occupier rate, as in, and also it's reflected in the recent data. A lot of mortgages taken out for Darwin, Northern Territory, have been for investors. So this is one thing to monitor and keep in mind. If suddenly there's a flight of investors out of Darwin, that may negatively impact house prices. In terms of demand, there's a lot of government sector jobs, healthcare, and then also defense force as well. Especially in recent times, government is prioritizing defense spending, and I think the US also as well is expanding its military presence and number of soldiers in Darwin area as well. And also as well, there's oil and gas projects. There's the Middle Arm project, which they've been talking for a while now. Having some roadblocks or hiccups along the way. Um, and also as well, Sun Cable project, which is going to be, I think, connecting, solar panels, generating electricity, and going to Singapore, I believe. All these kind of big projects. And I guess, unlike the last Darwin boom, which ended in a spectacular crash, the Impex boom, I think that was roughly 2008 to 2013. It seems these projects are a little bit more spread out. And also, as well, Darwin has had a very strong 2025, and basically in the last 12 months, even without announcement of these huge projects. In terms of the growth, um, I think some of the stats are a little bit more, by virtue, they are a little bit backwards looking. So if they're announcing like say 20%, the actual growth might be higher than that. But I guess the data will come out in the first part of this year as well. I'll share some of recent purchases that have made for Darwin. Um, so, uh, so one property bought for 575,000. Now it's worth conservatively 680,000. So uplift of $105,000, or about, you know, 20% in a 12-month window. And it's being rented out for $700 a week, which based on current valuation 5.34, yield on purchase of 6%. And another one, um, I guess I'll explain a bit of a story about this one. So this other property, pretty average looking, had been on the market for a long time. The listing had become stale, um, probably listed a little bit above what it was meant to be worth initially. But, sometimes you just have to go hunting and kind of building a rapport with selling agents, finding more about it. So for this one, the sellers were then becoming quite motivated to sell, kind of relocating, that sort of thing. And I was able to, after a period of time, able to negotiate a price reduction. So this ended up buying for 485,000, which is crazy if you think about where in Australia, in a big regional or big cap or capital city where you can buy for under 500K, it'd be almost unheard of now. And this one initially was rented out for about 690 a week, and that would have been a rental yield of about 7.5%. And now it's worth 630,000, so uplift of $145,000. So pretty much circa 30% in 12 months. So some people will be saying, have I missed the boat? Is it too late? I think it's still at the start of its growth, after a very long flat period. Similar to Perth, some people think, Perth has doubled in the last 4 or 5 years, it's going to crash, its boom is over. But in a way, it's kind of playing catch up from a last stagnant period, Perth from 2008 to about 2019, excuse me, 2008 to pretty much 2019, pretty much flat period, and kind of just playing catch up. And it's still relatively, for WA, very high incomes, a strong owner occupied demand, and also as well, very low listings and also low vacancy rate as well. So, obviously, if supply massively increased in Perth, then that might be a bit of a worry. But at the moment, it doesn't seem like any sign of it. So I know many of you guys are interested in Perth or Western Australia as well. So I guess that's kind of my 2 cents worth. So I think there's a lot of opportunities to be had. Um, I might also interview an investor who's also looking at some other markets, such as regional Victoria and also Tasmania. Um, so look out for that episode. But anyway, I hope you found this interesting, and I'll be sharing some more property locations this year. Stay tuned. Until next time.